Zero Hedge posted yesterday a screenshot of the Bloomberg terminal looking at a couple of the bond ETFs that the Fed is in, one of which is JNK, which of course stands for junk, because it is replete with junk bonds. And the Federal Reserve Bank of New York is now showing up as like a top 5 holder on many of these bond ETFs. And I noted yesterday that some of these bond backstops are going to companies like Berkshire Hathaway, who has $43 billion in cash and is a $465 billion company, and Warren Buffett's worth over $60 billion. And I wanted to see if you wanted to comment on that and maybe explain to some of my listeners how this type of policy widens the inequality gap. Paul Krugman rails against inequality constantly without realizing that it's his policies that are widening the inequality gap.
Yeah, well, anything that the Federal Reserve does that makes the economy less productive is going to, widen that gap, because the economic growth that otherwise would take place absent the Fed intervention would disproportionately benefit, people at the lower end of the spectrum by providing them with, a higher living standard, with more goods to buy and more employment opportunities. But if you look at what the Fed is doing, right, the same thing was going on during the housing bubble when you had Fannie Mae and Freddie Mac that were not allowed to issue junk bonds directly, going into the secondary market and buying the junk bonds that other companies were issuing. They were really kind of creating a market for for subprime mortgages, rather.
Right.
So they couldn't issue subprime mortgages because they had certain lending standards, which were still too lax. But then they were buying the subprime mortgages that these other lenders were originating, and they were kind of creating a market. And because they created a market, then the lenders were creating the supply because they knew they can unload it on the Fed. And that's what's happening right now, or on Fannie and Freddie. But that's what's happening now. You have bond companies knowing that they can borrow money from the Federal Reserve because the Federal Reserve is buying these bonds. So that basically means that the Federal Reserve is just directly lending this money to these institutions. And the Fed is obviously, indiscriminately buying these things. It is not, basing its decision on the viability of the loans. They're not charging a rate of interest commensurate with the risk of the loan.
Right.
So they are overpaying for all these bonds. And so they are lowering the cost of credit for all of these companies to a level that's much lower than what the market would price it. But at whose expense? You have to remember that the government doesn't create anything. The Federal Reserve doesn't create anything when it creates money or redirects credit. All it can do is kind of rearrange the deck chairs, right? So if money is or credit is being directed towards certain companies, then it must have been directed away from other companies. And so, when the government is trying to micromanage the allocation of credit, as opposed to a free market, right, where the free market is going to allocate credit to its highest and best use, it's going to go to where the credit will do the most good. But when the government does it, it's all based on political considerations. None of it is based on what's actually good economics. And so just like any centrally planned economy, any socialist economy, when you have, the central planner trying to make these decisions, they're never going to be as good as the outcomes that would be derived from a free market. And so that's what we have, right? We're moving away from a free market or further away towards more of a centrally planned economy. And so the people who the Federal Reserve decides are the winners, right, these corporations whose junk bonds they're buying, the Fed is basically picking them as a winner, but then they're picking all the losers because they're having to direct money away from them. And a lot of these are smaller businesses. Many of these businesses could be minority-owned businesses that are basically getting screwed so that these companies that really should go bankrupt. And a lot of these companies that the Federal Reserve is keeping in business, if they allowed them to go bankrupt, who would benefit? Well, a lot of their other competitors would benefit. A lot of the smaller businesses would be able to pick up that market share. They might be able to buy up some of their equipment or take over some of their, space, their real estate, or they may be able to take these resources and more effectively utilize them. But they're not being given that opportunity because these zombie companies are being propped up by the Fed. And now, because they have this advantage, they actually have an unfair competitive advantage against these other businesses who don't have the Fed subsidizing their credit. In fact, now they may have to compete in ways that are unfair, and it may be these smaller, more viable companies that end up going bankrupt because the government keeps these larger, less viable ones afloat. If they simply got out of the way and let the free market work, then a lot of these bigger companies would fail, but now a lot of these smaller companies would succeed and get even bigger. And they're better managed and they're more viable, and they're actually satisfying the needs of consumers in a cost-effective way. The companies that are going to go bankrupt, but for the Fed's help, are not doing that. Right? They're destroying value. They should go out of business. And by keeping them in business, we are lowering our overall standard of living. And people, they can always see the benefits. Oh, the Federal Reserve saved this company. It would have gone bankrupt but for this company. Okay, that company was saved. Well, what companies got destroyed as a result of saving that one? Right? No one notices all the unseen negative consequences. They just see the company that gets saved. They don't see the other companies that are sacrificed in order to save the other one.
Yeah, and I think if the public understood, this is something I was trying to get to yesterday. I mean, let's just ignore the fact for a second that printing money doesn't create productivity. It doesn't create jobs. We know that. Let's put that aside even for 1 second. If you just look at the sheer amount of money that has just been generated out of thin air, right? Trillions and trillions and trillions of dollars. If the average person understood how many trillions of dollars are being allocated towards places like Berkshire Hathaway, companies that don't need it, the bond market, private equity, we're talking about trillions and trillions of dollars while the Fed throws everybody their $1,200 breadcrumb, and not even everybody got that $1,200 payment, because if you were a hard enough worker and you made over $100,000 a year the year prior, of course you weren't entitled to free money. Yet the businesses and corporations that generate billions of dollars of cash and billions of dollars in net income, they're the ones that receive. So even if when you take the fallacy of the money printing out of the equation, still the way that the Fed has divvied the money up is egregiously disproportionate, right?
Yeah, but I don't even think it matters whether the people who get the money need it or not. They shouldn't get it. I mean, just because you need money doesn't mean the government should give it to you. I mean, look, people need a lot of things, right? And there's also a difference between what you need and what you want too. I mean, and a lot of that is subjective. But look, if you need something, you can't steal it from somebody else, because that's all the government can do. Right, because the government doesn't have any of its own resources. The government only has resources that it takes from private citizens.
Right.
So to the extent that one company is getting money from the government because it needs it, well, the government has to take money away from somebody else. Well, doesn't the person who they're taking the money away from, don't they need that money? I mean, why should the government decide that one person's needs are more important than somebody else's needs?
Right. They're taking the purchasing power.
We have to get away from this idea that it's up to the government. Like when you look at these the hearings yesterday that I was watching, and the congressmen are saying, oh, people can't pay their rent, they can't pay their mortgage, they can't pay their utilities. Yeah, those are problems, but they're not problems for the government to solve. And in fact, if these politicians actually understood the role that they played in impoverishing so many Americans, that so many Americans live paycheck to paycheck because so much money is taken out of their paychecks when they earn them, so they don't have any money to save. And another reason they don't have any savings is because interest rates are so low, and because the government, through its policy, has encouraged excess consumer credit. People have been borrowing money for credit cards and auto loans and student loans and mortgages where they shouldn't have been borrowing money. They should have been saving money. And if people were saving money, then they would be able to pay their rent during a few months where they're unemployed, or even more, or pay their bills. But the fact that the government has basically rendered everybody broke, now it doesn't mean that the government can actually do anything to help people pay these bills, because the government doesn't have any money. The government itself is broke. Look at how much debt the government has. The national debt is like $27 trillion. The government doesn't have any money either, right? The government has to borrow, and of course nobody will lend, so they just print. And so what everybody wants is the Federal Reserve to print money and give it to people so they can pay their rent. Give it to people so they can pay their mortgage. But ultimately what we're going to do is destroy the value of that money.